Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus will be on the earnings of Piramal Pharma. Remember, the stock hit a 52-week high level after soaring in trade post the quarterly earnings. So the stock markets have given a thumbs up for the Jan to March quarterly earnings. We've seen that the revenue for the company has grown 18% over last year to 2,552 crores and the profit has doubled to 101 crores. Even the margins have come in at a multi-quarter high at 20.8%. Remember, in the third quarter, the margins were at 13.7%. To discuss for us what has really worked for the company in this quarter and the way forward going from here on, the top management of the company is with us. Nandini Piramal, the chairperson of Piramal Pharma, joins right in. Warm welcome to you, Nandini, and thank you so much for speaking to us on Business Today Television. Do tell us, what do you have what have you assessed as far as the key contributing factors which have led to the doubling of your profits this quarter? And more importantly, will the growth on the bottom line be sustainable from here on then?
Thank you for having me. Our business is seasonal, so Q4 has historically been our strongest quarter. We are a fixed cost business, so as you see higher revenues, the operating leverage does flow through, and that leads to an improvement in operating margins. But on a year-on-year basis, we have grown 15%, and we have seen our EBITDA margin actually expand by 400 basis points. And so over this year, we've had a great year. We've actually increased EBITDA. We've increased our net profit. So it's more than doubled in Q4, as you said. And we have improved our net debt to EBITDA, which was 5.6 at the start of the year, and we've improved it to 2.9. So overall, I think the business fundamentals have been pointing the right way. We've seen an increase in growth on patent molecules in our CDMO business, as well as I said, a focus on operational excellence and cost optimization.
Right. So, Nandini, for FY25, if I ask you for the expectation on the top line as well, will you be able to beat the growth that we have seen for FY24 in terms of top line? Do you see levers for higher growth?
It is a difficult macro environment, so we're seeing early teens, both revenue and EBITDA growth. That's what we're forecasting at the moment. If conditions improve, for example, the biotech funding has been improving over the last calendar year. So far in calendar year 24, it has improved. However, it's too early to say, but if it does improve, that will be an upside.
Right. I will come to the US biotech funding question as well, but I wanted to first take the margins question with you, which has really come in at a multi-quarter high of 20.8%. Now, going forward from here, how do you see FY25 in terms of margins? Will you be able to sustain it at 20.8? Are there levers to improve it further?
So there'll always be a quarterly and a seasonality bias to our business. So it just the way it works and the way our customers, they would like their orders to come in actually in Jan to March. So that's when we can recognize revenue. So the way it always works is first half is generally quiet for us and H2 is much stronger, and we expect that to continue.
Okay. As far as some of your key segments are concerned, now you did talk about that CDMO was one of the key contributing factors. The growth over there has in fact outperformed the other segments in this quarter as well. How do you see the growth in the CDMO space to pan out in FY25?
I think, as we're seeing early teens for PPL as a whole. CDMO perhaps could grow a bit faster than that, but I'm happy to stick to early teens at the moment.
Okay, early teens growth is what you're expecting for CDMO. Now, you did talk about the difficulty that we are still facing.
Yeah, this is for PPL as a whole.
Okay, understood. Now, as far as the biotech funding, you did point out that, there is still, difficulty that one is looking at over here, a tough time panning out. But by when do you see things improving as far as the US biotech funding is concerned?
I think the first, calendar year, first 4 months have been improving. So I'm hoping that the trend will continue. But at this point, it's too early to say. The Fed is still holding interest rates at higher for longer is what seems to be the commentary. So I think we'll have to wait and see.
Okay, so one has to really look at the way the US interest rates also pan out for that factor to really see whether things are improving. But are you hopeful of second half to be a little better?
I would hope so.
Okay. What about the inhalation business? That has continued to have a steady market share for you, both in the US and the UK. Does that continue for you?
I think we're actually number one in the US. And the strategy for the business is, I think we're not number one, obviously, in the rest of the world, and we're fourth worldwide. So we want to increase our market share in those markets where we're not necessarily, presence in strong, sort of with a strong market share. So that's something we're focusing on. We're also looking at adding additional products to the pipeline. And as those launch, we should get revenue from those as well.
Okay. Now, as far as your launch pipeline is concerned in terms of products, how are you really looking at the pipeline shaping for you in FY25?
I think that we've got a number of different products in the pipeline, and I think the market size of those overall currently is about 2 billion. So I think, but some of them will launch this year, but some of them may be 2 to 3 years out.
Okay. I missed asking you about the complex hospital generic, particularly because on a year-on-year basis, this has seen a decline of about 5 odd percent. Could you list out for us any key reason for the decline in this quarter for this one?
I think our overall business grew at about 7%. In a generics business, there will be some price pressure. So, it kind of showed up in the last quarter. But I think we're looking at expanding capacity and we're still excited about the business.
Okay. How are the opportunities shaping for you as far as the antibody drug coagulate space is concerned? Are you looking at brighter spots there?
Yeah, so the ADC business and antibody drug conjugation is something that we've been doing a long time in our Grangemouth facility. We've actually just done a brownfield expansion of that facility for larger scale commercial volumes. And I think that remains an exciting part of the business. A lot of companies are going into it, and we have a lot of experience. So therefore, people do come to us.
Okay. I also wanted to discuss with you as far as the debt position is concerned for the company. You have already seen an improvement to about 2.9 times the total debt as far as, and it's down to 32 odd crore rupees. The question is, where does it go from here, and what level will you be comfortable with to end FY25?
So we expect the absolute amount of EBITDA to increase by as early teens, and so that will impact our ratios beneficially. So we should see a net debt to EBITDA ratio go down. I can't give you an exact number, but I think we're quite happy right now at 2.9. But overall, the general direction is reduction in net debt to EBITDA ratio.
Okay. In the past, you had raised funds via rights issue to cut your debt. Would you be looking at any fundraise thereof going forward from here?
No, I think we can plan whatever capex and kind of organic expansion that we want through internal accruals, as well as reduce some debt.
Okay, understood that. How about the demand scenario overall shaping up for your O2C drugs as well? And many of them you are a market leader in as well. Could you give us a little more color as to any significant milestones that you may have achieved in FY24, and where do you see things shaping for you in the O2C space?
So I think we remain very excited about the OTC space. The Indian consumer is one that is willing to try new products, but they do have a very strong value for money mindset. So you have to get the right product to them at the right cost. We've been focusing on our power brands, and they've seen significant growth in that. And we've also been focusing on launching new products. So our whole strategy is launch products in e-commerce first, and then take them offline when they succeed. So, for example, lactocalamine, we launched a sunscreen in e-commerce and it's done really well. And we've now launched it in general trade.
Okay. Also, Nandini, I wanted to also ask you, since the listing of the company, we have seen enough and more volatility in the initial phase. Things settled down once the debt started to come to streamline as well. What message would you like to pass on to holders and the prospective investors who are looking at you, because you're a very different company when it comes to the entire pharmaceutical space? So it gets a little difficult for people to also understand the kind of business you are in, even though we discussed all the key segments of yours and where do you see growth coming in from here on. What's the key message that you'd like to give?
We executed a strong turnaround in FY24, and then we're laying the foundations for both growth and margin expansion in FY25 onwards.
All right. Well, thank you so much, Nandini, for speaking to us and sharing all these insights from the quarterly earnings. All the very best I wish you for the upcoming quarters. And here's hoping for more interactions to get better clarity as to how you're envisioning the company's growth going forward.
Thank you so much.
Thank you, Nandini. All right, viewers, we will wrap it up at that. That was Piramal Pharma. Remember, after the earnings and strong set of numbers coming in, we have seen the stock markets give a big thumbs up and the stock prices have shot up to a 52-week high level. Nandini Piramal clearly talking about the kind of growth opportunities that may exist going forward from here in FY25 and various segments that she continues to believe where the key growth drivers will be emerging from for the company in FY25 as well. Wrapping up at that, but do stay tuned onto Business Today as we continue to get you such exciting and exclusive conversations with the top managements of the companies that are reporting their numbers and are listed on the exchanges.
If you like the video, do like, comment, share and subscribe.